If you're a Palantir shareholder or you're thinking about getting into Palantir, I'm going to go over a few things that you need to know before doing so. We're going to go over the market, where I think that's headed, Palantir, where this thing could be going in the short term and long term, and potential risks that you need to know about. And then we're going to dive into my portfolio, and I'm going to show you my exact strategies that I'm deploying on Palantir to hit my return goals. Now, let's go ahead and dive into it. So, the very first thing you need to know is Palantir has earnings on August 4th, okay? So, that's a major risk potentially if you are, getting into Palantir today. And we're going to talk about the earnings and potentially how they might miss earnings and the stock could take a nice pullback. But first, let's take a look at the CME FedWatch tool. This is basically the futures for interest rate cuts, and it is predicting an interest rate cut still in September. The odds did go down a little bit, probably about 20% downwards, but it's still very promising that we are going to continue to get interest rate cuts. So that is what we're looking for as far as the market's heading higher. Now, if we take a look at the NASDAQ 100, if we take a look at QQQ here, we could see we just keep grinding higher. And as I've been saying the past couple weeks, I'm expecting us to get to this 540 level before we actually have a decent sized pullback and kind of a opportunity to get more, right? Acquire more shares or acquire more options within your favorite companies, okay? But that's kind of what I'm seeing here. The VIX, the fear and volatility index, is subsiding as we saw a spike above this 20 level, which is, anything below 20 is kind of the zone of confidence and greed. We kind of fell back into that today. Obviously, fear is still a little bit elevated at 19, but we did see a spike on Friday, obviously, with all the geopolitical tensions that are happening. And that was actually a prime opportunity to kind of get back into your favorite stocks and really load up. And that's particularly what I did. But what I want you to look at is the VIX levels and how much cash is being allocated. So before I show you the VIX cash allocations, I just want to let you know this is not financial advice, and I'm just sharing what I'm personally doing for educational purposes only. So the VIX levels for 2025, 2026, we're kind of sitting right here. So personally for me, with VIX between 15 and 20, I like to be anywhere from 60 to 80% allocated, or have 20 to 40% cash on the sidelines. But for me right now, because we are recovering from the fifth fastest stock market crash, I'm actually a little bit over allocated. So I'm about 10% cash, 90% allocated. But again, that's for, this is not financial advice. This is just the rules that I'm following to keep myself safe when, for any potential downturns in the market. But now we can go ahead and get into Palantir now that we know, okay, the market's headed higher. The VIX is still elevated. So as fear subsides, as we see the fear come down, right, that's going to be good for the markets and good for Palantir, right? The higher that the markets go, the lower the fear goes, the more people tend to buy into high flyers like Palantir. So I do see this thing kind of subsiding to the 15 area, maybe even the sub 15 area. And that's where you have to start getting fearful, because most people are greedy. But before we dive into it, if you do want to learn how to trade options and you want to join my private mastermind with 180 high-level clients in there, that'll be at the top of the description. If you see that website, then you'll go down. You could even see some of our client testimonials, our most recent ones that I post on the website. Also, if you want my free trade ideas, I give those away on Instagram, and my free newsletter, which are also both down in the description below this video. But let's go ahead and dive into the catalyst for Palantir. So there's a few reasons why this stock is really taking off, why it's making new all-time highs, and why the valuations are absolutely crazy on this company with a PE ratio in the 600s, okay? So first off is the heightened geopolitical tensions. You can only imagine why Palantir is benefiting from this, right? Because they create AI warfare technology, okay? So they are benefiting from all the geopolitical tensions that are going on right now. And that's why investor sentiment is very high in stocks like these, which is very, for Palantir, they're not only a defense company, but they're an AI defense company, which is kind of state of the art. If you look at other stocks like Lockheed Martin, those gapped up right when this thing happened over the weekend, and that's why Palantir is kind of taking off right now. So that's one of the reasons. Another reason is that President Trump mentioned this Golden Dome. Basically, the Golden Dome will be the most advanced and complete missile defense system in history, right, to protect the White House, protect the president. And initial funding is pegged at $25 billion, currently being processed through Congress. However, that's a part of a larger plan based on $175 billion over 10 years. So obviously, the government is going to be spending on this Golden Dome program, which is going to be SpaceX, Anduril, and Palantir all combined in one, working on this project. So Palantir is going to be a beneficiary of this project, meaning more profits for Palantir and their shareholders. So that's another big catalyst that is really boosting the stock, okay? Now, if we take a look at the fundamentals on the stock, the fundamentals are obviously great. As far as their growth and profitability, their last quarter, they had 24% net margins. As far as cash on hand, that's why I love this company. As far as PE ratio, their PE ratio is out of control, but they do have a lot of cash on hand. So they have $1 billion in cash and equivalents that can cover their debts, 5 times over. So I'm not worried about this company kind of weathering a storm or weathering a bear market or recession, okay? That's why I, feel confident in investing in this company. But as we see earnings, okay, earnings are not being, they're not as big of surprises anymore. So they're not kind of outpacing the expectations of this company. Obviously, the last earnings, Q1 2025, wasn't that good, right? I mean, they were great, but they weren't as, most investors expected a huge blowout surprise, and that didn't happen. So what I'm thinking is going into Q2 of 2025, so their earnings coming up on August 4th, I think that they're not going to meet, they might kind of just meet expectations, but nothing blowout again. And I think that could be, a nice pullback on the stock. So that's where the risk lies. I do think that this company is obviously, they're growing their commercial revenue, and that's what we want to see, right? Government, obviously, they're still growing that as well. Government always has new projects. The military always has new projects, but they're kind of getting tapped out there. And really what we're looking for is their commercial sector to be growing. And that's what they've been really good at growing, is making hundreds of new partnerships with big companies like Walgreens, Wendy's, right? Heineken, like huge companies are partnering with Palantir for their AI software. So we see the growth. We see the growth there, but valuations are getting a little out of line going into earnings, which could be a big risk. So if we look at the actual stock price, okay, what I like to have pulled up here is a few things. So as you can see on my chart, I'll have the Bollinger Bands pulled up. So Bollinger Bands basically are this top and bottom line are 2 standard deviations away from the average price of the stock, okay? Meaning the stock is gonna stay within these bands 95% of the time, and 5% of the time it's gonna go outside of these bands. As you could see, today we just poked above that upper Bollinger Band, okay? We hit a new all-time high of 145.22, I believe, somewhere around there, 145. Brand new all-time high on Palantir, okay? And every time we've seen this thing poke above the upper Bollinger Band, yes, okay, it can ride this upper Bollinger Band for quite some time, but eventually it loses steam and it falls back down to this lower Bollinger Band or middle of the Bollinger Band. And that's what I expect, okay? So yes, this thing could go up potentially into earnings. I wouldn't doubt if this thing went from where it's at now to $156 or even $160, okay? That wouldn't be surprising if it went up another 12% from here, okay? But with that being said, there is just even more risk involved with owning it at these prices, okay? So, the RSI is not it's nearing overbought levels, but it's not overbought yet. If this thing got up to 150, 155, we would be in those overbought levels. And as you've seen in the past, this thing could be overbought for, half a month and then it kind of falls downward. If you see it back here, it was a little bit overbought for a couple weeks and then it fell back down. And that's the moment I'm waiting for, okay? So I'm not trying to chase this thing up here at these levels. I'm just gonna let it ride up with the current position that I have in expectation that earnings may not be as good as expected, okay? And they might be great as far as fundamentally, like the company is hitting their marks, but just not blowout. And this thing could come all the way back down, like if we look back at this area right here, this was kind of a big gap down. We went, negative 25%, okay, in just a week and a half. So would it be far-fetched to say that this thing could come down a good, let's just say 15%, right? It could come down 15% from these levels. That would leave it at somewhere between 120 and 115, which would be near the lower Bollinger Band. Okay, that's not surprising. If we run up to 155, let's just say, into earnings, this thing could easily go down 20%, okay? On just maybe people just getting out in profit that were in the stock down here, and now they just want to take profits. Right, so you could expect this thing to really come down to 120, 115, somewhere in those levels. And that's kind of what I'm waiting for, okay? So especially with the PE ratio, if you look at the PE ratio back here before the crash, this thing was at 680, I think it was like 681. Okay, we're at 620 right now. So we're getting a little bit too overextended on Palantir in the short term. In the long term, this thing for sure can go into the 200s, 250, 300 long term, a year from now, 2 years from now, 3 years from now. Obviously, that's not guaranteed, but with the kind of trajectory that Palantir is following, it wouldn't be far-fetched to say that they do go there. But in the short term, you got to be careful, right? So let's dive into my portfolio and I'll show you what I'm doing and why I'm doing it, because I want to keep myself safe. I don't want to be, caught with basically a 20% drawdown here on Palantir. So obviously, before I show you this is not financial advice. I'm just sharing this for educational purposes only. But this is my account right here, okay? This is my account, main account, and we have Palantir right here. So what I recently did today with these 6 puts, these cash secured put options, I basically sold the 125 strike, okay? And as you can see, this meets my return profile, okay? We could even go to the options chain and I'll show you, the ones that I did. I basically went out here and I went to this specific strike, 125. And the reason I did that to collect, this much is because if you look at the Palantir chart, okay, 125 is kind of where the previous all-time highs were back before the stock market crash in February, okay? Especially here, there was some prior resistance and support, and now this 125 area serves as support. So I'm okay getting a sign down here. If the stock does come down below 125, that's okay. I'm a buyer at 125 because I'm comfortable with the stock at that price and that PE ratio and that valuation. I think that's a good area to acquire the stock. And from right now, that's an 11% basically drop from the current price. So I like it there. That's kind of meeting my return profile and also not getting myself chasing this stock into new all-time highs. So I have that, and those expire, a little over a month from now. So that will keep me safe as far as, if I do get assigned the stock in a month or so, I get it at the levels that I want it. And, I collected a nice premium. So that's the play that I have for Palantir. I think that's the safest play for now. Obviously, if this thing does take a pullback during earnings, so in a month, we'll talk about it throughout July. But if there is some sort of pullback to the middle Bollinger Band right here at the 128 level, or even the lower Bollinger Band at 116, those will also be areas that I get a little bit more aggressive, maybe acquire a Leaps call option for a long-term expiration, and then I ride this thing back up to previous highs. So that's gonna be my take on Palantir. If you enjoyed this video, please give it a thumbs up as that boosts it in the algorithm, and I'll see you in the next one, and I'll link another one right here that you could watch. Take care.